Joining us now, former Treasury official and Morning Joe economic analyst Steve Rattner, and tax policy expert and professor of law at Emory University, Dorothy Brown. And Steve, this morning you're looking at the risk all of the big spending has on inflation. But first, I just want to ask you to assess the president's description of the challenges that we face.
I don't have any disagreement at all about the challenges that we face, and particularly the way the president articulated them. We are and you can call it a fourth industrial revolution or whatever you want to call it, but we're in a period of massive change. We're in a period of enormous competition, particularly from China. We have fallen behind in our spending on things like research and development from the public standpoint. We do need to get our workforce better trained for the jobs of tomorrow. All of that is absolutely true. I think the question is, how do you go about it? The president's heart is very much in the right place. He's proposed a number of things that would be helpful, but he's also proposed a lot of spending that would really not address these issues. Stimulus checks and things may be a good idea, but they're not going to fundamentally restructure our economy. So there's some good, some bad inside of what the president proposed.
So take us through your charts, and you're looking, I think, at the impact right now on the economy and the different pressures that we're facing.
Yeah, I'm very concerned that the size of these packages is creating a lot of inflationary pressure. The question is no longer whether we're going to have inflation. The question is how much inflation we're going to have and how long it's going to go on for, because we're having inflation right now. And I can show you some examples with everyday goods that people buy and the kinds of price increases that they're starting to see. So you have used cars that are up 21%, and I'm comparing this to pre-pandemic prices, so we try to isolate the pandemic itself. But you have used cars up 21%, you have chicken up 7%, you have sports equipment up 5%, you have furniture up 4.5%, and even computers, which historically have gone down in price because of technological improvements, actually going up a bit. These may not sound like huge increases for some of these products, but remember the Fed's target is 2% for inflation, and you're seeing inflation much higher in a lot of other places. There's also clearly more inflation coming, because if you look further up the food chain to what we call producer prices or wholesale prices, the prices that companies pay for the goods they need to make these prices, you can see on the left that the producer price index rose 6% last month, the highest it's risen since 2011. And so that's a reflection of increases in prices of things like corn and copper, which have doubled, iron ore, which has gone up 2.5 times, lumber, very important for housing, up 3 times, and so on and so forth. And then on the right, this is a survey of what people think, what business thinks inflation is likely to be. And you can see, again, it sat very firmly at this 2% level for a long time, came down a little bit during the pandemic, and has now gone up to 2.8%. May not, again, sound huge, but it's going the wrong direction, and it's going the wrong direction quickly. And then lastly, what is also going to push inflation up going forward is the fact that consumers have a lot of money to spend. During the pandemic, incomes were actually $900 billion above the long-term trend. Much of the increase due to federal spending, to the stimulus programs. For example, all the way on the right, you can see those 2 spikes from the stimulus checks that went out in December and again this spring. It's great. It's good to have money in consumers' pockets, but we have to be cognizant of the inflationary effects. And then looking down below, you can see that consumers haven't been spending that much for obvious reasons. They were locked down. They weren't able to spend. And so there's about $1.1 trillion, what we call dry powder. In other words, money above the trend line in consumers' bank accounts, a total of $2 trillion. And as I'm sure you would agree, consumers are getting ready to go out and spend again as the lockdown ends, as the vaccine takes effect, as the pandemic eases. You're going to see a lot of spending, and that's going to push prices up even further. So this is all a little bit scary, more than a little bit scary to those of us, particularly who lived through inflation in the 70s. And it's something that we should all be very concerned about.
Professor Brown, interested in your take on those charts, but also on the bigger question of the amount of stimulus that's been pumped into the economy. We just heard a minute ago President Biden talking to David Brooks saying this is the moment to go big. The huge COVID relief package, now he's trying to get a $2.25 trillion infrastructure bill through. Republicans say it's too much. We don't need it. needed at this point. The economy is coming back on its own. What's your read about where we are in our economy and how big President Biden really should go here?
President Biden should go really big. What the pandemic showed us is structural inequality in our labor market, in our service provision. So it's really important that we take stock of what we've just been through. There are millions of women who have left the workforce. Why? Because childcare is a problem. We need to think about federal support for childcare. So what the pandemic has shown us is this economy has never worked for all of us. And what President Biden is trying to do is to make sure the economy does work for all of us and is inclusive.
Yeah. Professor, let me ask you about inflation, following up on Steve Rattner. So it's obviously a balancing act. I'm curious how you balance it in your mind when you look at the risks of inflation and some signs that inflation's coming, and also the very real reality that if chicken goes up 7% to most of the people that come on this show, doesn't matter. They can afford that. But working class Americans can't afford that. Inflation actually and interest rates going up. That's a massive tax actually on the truly disadvantaged and working class Americans. So how do we balance those two realities?
Well, first, I don't think economists agree on where inflation is going to go and what the risk is. So we have one economist that says they're really concerned. Steve says he's really concerned. But there are other economists who would suggest they're not as concerned. So I don't think we have agreement in the economist world. But even if you take as a given, inflation is going to come, what we need to deal with is the fact that we've lost 8 million jobs from the pre-pandemic level. People want to work. There aren't jobs out there for them. So whether it's retraining, whether it's raising the minimum wage, whether it's making sure people who work full time can actually earn a living wage, I think all of those are important. So I don't think we should ignore inflation, but I don't think economists agree that inflation is looming so far over our head that President Biden should not go big.
All right, Dorothy Brown, thank you very much. Steve Rattner, thank you as well. Dorothy's latest book is The Whiteness of Wealth: How the Tax System Impoverishes Black Americans and How We Can Fix It.